Bobo and welcome to our weekly recap of Hong Kong real estate. Starting off with international news, the market generally expects the US Federal Reserve to cut interest rates in September. But with this being an election year in the US, the situation remains uncertain as Joe Biden announced his withdrawal from the 2024 presidential race over the past weekend. Meanwhile, Donald Trump has stated that there shouldn't be a rate cut before the November election. Nonetheless, even if the US does lower rates, whether the Hong Kong property market will follow suit depends on local economic conditions. Recent land sales suggest that developers have a cautious outlook on the market. Last week, Sun Hung Kai Properties acquired a piece of land in Sha Tin for around 620 million Hong Kong dollars. With a buildable gross floor area of about 150,000 square feet, this translates to about 3,952 Hong Kong dollars per square foot, a 55% drop compared to a similar plot in Sha Tin 2 years ago. Some surveyors believe that the land, located in a mature development area, allows developers to acquire land reserves at a lower cost amid a market downturn. Sun Hung Kai Properties stated that the total investment for the project is about 2 billion Hong Kong dollars and will be used to build small to medium-sized units. In the first quarter of this fiscal year, land revenue was less than 200 million Hong Kong dollars, a nearly 90% drop year-on-year, accounting for less than 1% of the annual forecast. Secretary for Development Bernadette Lin stated that the government sells land at market prices, which are influenced by market conditions, and emphasized maintaining a calm approach. Turning to the first-hand property market, the first batch of units at Gold Coast Bay, the Uppland, launched last Saturday, sold out all 188 units. The low prices clearly attracted buyers, prompting the developer to release a new batch of units. The new batch includes 108 units, ranging from about 200 to 650 square feet in size, featuring studios to 3-bedroom units. The discounted prices range from about $2.2 million to $7.76 million, with an average discounted price per square foot of 11,000 Hong Kong dollars, 12% higher than the first batch's 9,988 Hong Kong dollars. Although the new batch offers units on higher floors, some units still saw price increases of over 10%. For example, a 200 square foot studio from the third price list is priced at 2.53 million Hong Kong dollars, 260,000 Hong Kong dollars higher than a similar unit from the second price list, effectively an 11% price hike. Another recent highlight is the Kai Tak development, the Pavilia Forest. Over the past 9 days, around 254 units were sold, accounting for nearly 20% of the total units, bringing in over 1.7 billion Hong Kong dollars. However, sales have shown signs of slowing down. In the first batch of 108 units launched last Sunday, more than 60% were sold, a sizable drop compared to the first phase, where over 90% of units were sold in the first round of sales. Despite the reduced sales ratio, the launch of new large-scale projects boosted the weekend's primary market transactions by 34% week-on-week, hitting a 3-month high. Of the 289 total transactions, nearly 90% came from Gold Coast Bay, the Uppland, and the Pavilia Forest 3. Additionally, Phase 3B of Novo Land recorded 10 deals, making it a standout in terms of transaction volume for remaining inventory in the primary market. This month's primary transaction volume has reached around 840 Hong Kong dollars. That's a 25% increase compared to last month's total of 670. While the secondary market also saw a rebound, transaction volumes remain low. Over the weekend, Hong Kong's 4 biggest real estate agencies all recorded weekly increases in transaction volume for the city's top 10 blue-chip housing estates. Notably, Centerline and Midland saw double-digit levels with week-on-week increases of 42% and 57% respectively. According to property agents, as buyers flock to new low-price projects, some homeowners are widening their bargaining range to attract more buyers. On that note, let's look at 3 deals with price reductions that illustrate this trend. A 2-bedroom unit in Lohas Park's Malibu, measuring 560 square feet, was initially priced at 12 million Hong Kong dollars, but eventually sold for 8.7 million Hong Kong dollars, or about 15,500 Hong Kong dollars per square foot. This resulted in a paper loss of $1.37 million, or 13% from the original purchase price of $10.07 million. Similarly, a unit in Kingswood Villas saw a total price drop of 800,000 Hong Kong dollars. The high floor unit in Block 2, with a saleable area of 449 square feet, sold for 3.45 million Hong Kong dollars, just under $7,700 per square foot, down 18%. Despite the price drop, the original owner who bought the unit in 1999 still made a substantial profit of around $1.9 million. At Waiwa Center in Sha Tin, a long-term owner also made a profit after reducing the price. This was a mid-floor unit measuring 358 square feet, priced at 4.8 million Hong Kong dollars, down from the initial asking price of 6.5 million Hong Kong dollars. This sale, at around 13,400 Hong Kong dollars per square foot, resulted in a profit of $2.54 million, or more than double the original purchase price in 1998. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.